So hello everyone, hope everything is going well. I think everyone joined now. So today our topic will be about pivot points, unlocking the potential in trading. So this webinar aims to help participants master the important factors and to know more about pivot points. So very important to know the materials and tips provided within this webinar save you big losses and years of misery. At the same time, it helps you on advance your trading journey and elevate you significantly and rapidly. So welcome to the Advanced Technical Analysis course. In these lessons, we're going to cover some additional technical indicators, tools, and patterns you can use to find opportunities. And this will be on during this whole month. We will be discussing all the advanced technical analysis. So let's start with a useful way of finding support and resistance levels called pivot points. So our topics are: what are pivot points, finding support and resistance with pivot points. We're going to give about an example about pivot points. We're going to show you how to calculate pivot points and pivot points fact sheet. So what are pivot points? Pivot points are a technical indicator that traders use to predict upcoming areas of technical significance such as support and resistance. Basically, the word support is where you always look at this, for example, gold reaching this point, and this support is where it's gonna, if it stays above this support line, then it's gonna go, for example, up. And the resistance is the minimal. They're calculated by averaging the high, low, and closing prices of a previous period. That could be a day, a week, or a month. So it's gonna be like a daily, weekly, or monthly. If a market is trading above its previous pivot point, known as P, so please note down the word P so we can get back to it. Exactly what does it mean? It is seen as bullish signal. If it's below, it's bearish. So as we said a few seconds before, as long as it's above the resistance point and above the trading previous pivot point, then it means it will go up. Day traders often use this as a method of spotting short-term trends. For instance, if EURUSD is trading above P, which is the previous pivot point, from the previous day, they may decide that it will continue to climb and look to buy the pair, logically speaking. Now, finding support and resistance with pivot points. However, P isn't just used to gauge today's price action. It also forms the basis of 6 further calculations to identify possible areas of support and resistance, known as S1, S2, S3. They are for support. R1, R2, and R3 are known for resistance. These levers appear on the chart as parallel lines to P and can be used as profit targets or areas to open a new position. I'll show you on the graph. So here, as we can see, this graph, we have here the month, February, March, April, May, June until December. So this is basically talking yearly. And we can see the pivot points standard by P. As we can see here, P is the pivot point where the market closed lately. And then, as we said, people buy anything above the pivot point. We have the S1, and we have here, as we can see also, the S2, S3, and this one is also the pivot point here in this level. Now we're going to start here. Here is our pivot point. Okay, so in this pivot point, it went down, then went up, then went down to another pivot point, then it went down, then it came up above, and then went up to the resistance, as we can see here. So pivot point example, let's take a look at another EURUSD example. The pair is trading below its previous day's B, which offers a short-term signal that a bear run may be forming. You decide to short EURUSD as its current rate. You could aim for S1, S2, or S3 as a profit target. So you always look at S1, S2, S3 that might be take profit points. Just like other support levels, these would be seen as stronger if the market has bounced off them before. If S1, S2, or S3 line up with previous support area, it could make for a good target. So we have to look always at S1, S2, S3. This shows us how strong it is and the support it's being provided. Alternatively, you could wait for EURUSD to bounce off support at say S1 and buy the reversal. If you did this, P or R1 might take a good profit target. As we can give this example that we mentioned before in this graph, we can see the support down and the pivot points. So how to calculate pivot points? To work out P for yourself, follow these 3 steps. Find the high, low, and closing price for the previous day, week, or month. Add them all together and divide the results by 3. And then you have to highlight this price on your chart as P. So you get the high, the low, and the closing price of the market when closed for the previous day. Okay, and then, or we can use it for the week or month. And then we add them all together and we divide the results that we got by 3. The math behind the S and R levels is a little bit more complex. R1 is equal P times 2 minus the previous low. So how do we calculate R1, R2, R3? R1 is calculated by pivot point times 2 minus the previous low. Previous low is the one that was closed the day before. R2 is equal to P minus S1 plus R1. R3 is equal to P minus 2 plus 3. And the support 1 is equal to P times 2, pivot point times 2, minus the previous high. S2 is equal to P minus R1 minus S1, and support 3 is equal to P minus R2 minus S2. So pivot point fact sheet. So the type is indicator. It's used in any condition. It's used for predicting bull or bear trends, identifying future support and resistance. It can be used in any market and any time frame we want.